Welcome to Trading Lounge and the US indices for Tuesday, September 13. And starting on the S&P for the daily chart, we're looking down here as the A wave, an A and a B and a C wave here, and then down for a larger C wave from B to C. Now, the market can have a bigger bearish pattern, but we don't need to go into that today. We just really focus on A to B, and currently we're looking at the A wave, the B wave coming back to the 61.8%. Sometimes it hits it perfectly and other times it's hauntingly wrong, but 41.65, 41.68, probably the closest largest number would be 70, but obviously the old highs at the 200 play out as well. The other point here too is that we can look at this as wave 1 down here and wave 2, and that would bring us down into a steeper, faster move to the downside here. And yeah, we can take a look at that, but the main thing today really is to understand this particular trend to the upside here and when that's going to finish. So yeah, that's it at the moment. So just to look at that kind of briefly in here, I'll just use the SPY and we'll come back to the S&P. I mean, people like to use leverage rather than these markets, but basically we're looking at the A wave, the B wave, wave 1 and 2 and 3 and 4 and 5. Now it's possible to put wave 4 in here, but it just looks a little bit small, so we just need to be prepared for a little wiggle before a move up, but the futures market is suggesting that it can move up from there. In terms of wave proportions and things, we can see that wave 3 is much longer than wave 1 here, so it's possible to have the length of wave 1 as the length of wave 5. Coming up to the 420, we talked about some other little zones in here, but the 420 is kind of a bit of a glass ceiling there for that market, and there's also a bit of a gap up here on the cash, on the SPY here as well, that could be worth noting as well for that. So the main point here is that the market can move up further. So that's sort of where we're at, really. So I was thinking that we might be able to, everything seems to take longer than one expects it to, especially the younger you are, but I'm an old crusty fart, so I should know better. But it looks like we're going to be seeing Tuesday and Wednesday to the upside, so we're not going to see any weakness here until a bit later. Of course, it depends how long that trend is, that wave 5 is going to, how long it is, and how quickly it moves, and all of those sorts of things. So yeah, that's sort of where we're at. But you know, I was kind of hoping that, well, what I want to try to do is put out a video where we can go from 4 to 5 and start counting most of this up here. You know, we'll have a look at that on the futures market, I think, more so. So, but anyway, that just gives the SPY is the SPX, or the SPY is just quite nice to give you a nice sort of clean count with all of this. And just remember that too, when we look at the SPY or the SPX, we can look at this as wave 1 and 2 here. We can't do that on the futures market. It's a different scenario, but we need to bring it in line with stock. So we need to look at this as a wave 3 and 4 in this particular space. The wave 4 here is a little bit small at the moment, I reckon, but we'll see how that goes. So back onto this page here, I think we'll just go to the bearish count and then we'll end up at the 100 ticks. So from here, we'll go to the 50K. And that's the just the general. The 50K ticks a bit like the daily chart. Really, not a lot of difference. It's a little bit sharper, but I like the tick charts. They give me a little bit more detail because I need to see inside of. I need to see details inside of structures to help me count things a bit. But yeah. So anyway, like I mentioned, coming back up into this area through here is the 41.76 roughly here, but the 65 is an important number. and 72, and the 4180 is also an important number as well. But let's just double check things here a little bit. You can do a better job than I can a bit later, but if we need to take this low here, not this one. If we're looking at this as the A wave, the B wave, and the C wave up here. So that brings us down a little bit. So what we can do here, let's just bring that down onto that level there, and let's just sharpen this up here a little bit. So yeah, like I said, the 165, 167 is probably about the right place for all of that. And also too, coming into, you know, this block here, you know, mirrors this block and mirrors this block. So somewhere in between all of this here, we'll be looking at the 50%. So the 50% is the, so it brings us into the same sort of thing there really. So yeah, 4165 is the lower end of subgroup 2. 4172 is the sort of backbone of group 2, and then we've got 4180 in there as well. But obviously, you know, that's going to slow, that little area is going to slow the market down, and of course the 42 is the big number at that point there. So anyway, just good to sort of look at that. We can go to the 10k, then the 1k, and then the 100. So 10, 10, 10. So not a lot to do here either, but I do want to, I know we've got to move up here now, so I want to bring this up to 167, 168. So, you know, I've got the boxes green to short it at this point, but you don't have to overdo it, you know. The other point here too, this is just another count. If you do take this as the low here, then we'd be looking for 5 waves up here, right? So that means we would look for a counter trend back to the 50-60%, and then another move to the upside here that could take us to that top there. So just something to keep, we'll just keep an eye on it. It's not a biggie, and it may not occur. Just depends if you count that as the low, because then we'll need to count 5 waves up here, you know. So that would leave that exposed. So anyway, we'll just keep a bit of an eye on that, and we'll be, you know, when this comes back down here as well. I mean, obviously there's going to be, you would basically, you know, well, everybody's different, but if you're trading down here, then you can expect to bounce off that 4,000, you know, which brings us into this. And not just that, it will also be the balance point in that swing of that trend there at the 50-60%. So in one way or another, it's going to bounce here. So we'll just see what the structure looks like at that point. I normally say that if you get 5 waves to the 61.8%, then, you know, you're going, or you either get 5 waves to it or 3 waves to it. If you get 3 waves to the 61.8%, well then we'll look at that being corrective. But if we get 5 waves to this point, well, obviously we'll begin a bounce and we'll come down again. So yeah, so that's the thing at that point. How you trade and navigate all of this is, you know, is another thing as well, because, you know, when we go from, if we go from here to here, so to speak, we could end up back up here as well with that, you know, as another bounce in this area here. To, you know, the time we get up to there, we can come here and then bounce to there and then come down from that point. So not always not so easy, you know, but most people are just trading this sort of shorter term for, you know, an intraday or a day or 2 days or something, or just sort of hanging in the trend. So I mean, we'll look to, you know, look at this down to here, get out, and then we'll look to get back in, and then there'll also be another bounce coming back up here as well, which is, you know, significant, and it needs to migrate from being support to resistance, the same as it's done here as well, and the same as it's done here. The bounce, come through, go back and check it, then drop, you know, that type of thing. So it needs to wiggle its way across, and it's a it's a process. So on 1000 ticks, I don't know much detail here. Okay, it's just the shell of it here. So this is a slightly different count here on than the SPY in this case, you know. So in this case we've got the A wave, the B wave, we've got 1 and 2 to here, then 1 and 2. Because we've got a different setup here on the SPY, we can look at that as wave 1 and 2. So this will be 1 and 2 here, 1 and 2 here, and then 5 waves up for the third, fourth, and 1, 2, 3, 4, 5 for third, fourth, and going up to the fifth wave here. So taking us a bit high, but let's just go to the 100 ticks so we can get a better grip on this here. Can we look at that as wave 1? Can we put wave 4 in here? Because I'm thinking wave 4 might end up over here, you know. If this top becomes the support over here, right? If that becomes the support, that level, then we're going to continue to go up there, and we can look at this as wave 1 and 2 here, right? But otherwise it could easily be some sort of A wave, B wave, and C wave up here, and then come back for the fourth. But I'm going to put it in here for the moment because we do have a nice ABC. It's just a little bit small. It sort of bothers me a little bit. So just be a bit careful about that. But it is nice support there so far, isn't it? Right, let's just open this up a little bit further. Okay. So we've got this here as, yeah, because from this B wave low here, I can count 1 and 2 and 3, 4, 5 here for 1 and 2, and then 1 and 2 here. So a slightly different count. Then I've got 1 and 2 here, and then 1, 2, 3, 4, 5 for third, fourth, fifth. So I'm happy with all of that. Third wave's a bit small in here for this. When I go 1 and 2 here, 3, 4, 5, it's a little bit dodgy there. So yeah, so if this just pushes up here further, then we'd be looking for 1, 2, 3, maybe 3 here somewhere, 4, 5. So there's 6, 5 up here. So 4, 6, 4, 6, 5 is really where we're looking at here for that. 4, 6, and 7. 4, 6, 5, 7, 8, somewhere in amongst there. That's the short there. But where does that leave us? It still leaves us a bit, you know, it's not the longest sort of thing here, is it? How does that compare to wave 1 here? Not too bad. I mean, I expect the market to slow down as it gets up here, you know. So I think that's kind of about right. I mean, wave 4 is just a little bit small. I kind of wonder, you know, if I can put this wave 3 here, and this is what's sort of going through my mind, so I'll share it, and then having wave 3 up here for that, and then wave 4 and 5. So that's kind of on my mind a little bit, but I'm not getting that with the stock market as such. But still, you know, I mean, picking the top is one thing, and picking the top is one thing, but it's not, to me, it's not that important. The important thing is that, you know, making a trade without losing anything. So I think what we need to see is from somewhere up here, and it might be 4.2, it might be 41, you know, in group 2 here somewhere. It's basically we need to see a sharp drop at some point, you know, a bit like this here. And then what we do, we can go short here, and then we can look for the next one and go short here, and then let it come to us and trip us out, you know. So we're looking for that ABC pattern here for that, and then we can look for that. Of course you could sell right on the top and things like that, but I find that, you know, if you get too particular about it. It can take you sort of 3 or 4 times to get in, and as long as they're really small losses, it doesn't matter too much. But I kind of like to wait for validation in a way, something a bit more, I mean, as you get older, you get a bit more patient, which is good, and you can wait for the market to come to you rather than chase it. Because if you chase it, it will take you. So just looking for that weakness, something to sort of prove it. If you can see 5 waves, and then start working the levels, like obviously this is going to be up here. If it comes back to 4.1, well, it's going to come down to 4.1, isn't it? And it's going to bounce off that, and then it's going to go through it, and it's probably come back up here. Maybe it's really an ugly picture and it's sort of like that, but you ended up with a low here that you can work with, and another low here, and then there may be another low in here that you could work with as well. So you're really looking for that kind of validation that's been tested and it's failed by making a new low in these areas here. But most of the time the market will come back above the top here. So the most common pattern is this one, where it comes back above the top, so you need to go in there again. You can use these ones, but still haven't gotten rid of that ugly little sucker. Certainly a good marketing ploy, isn't it, having something so stupid. So anyway, that's that. So enough waffling. Let's just cruise along a little bit, shall we? This is the triple Q here, just to give a nice sort of picture and something else. But in this case here, I suppose you could count this up here differently. But yeah, it's a little bit of a tricky one. But I've decided to go for this as the 1 here and 2 here in this case. And then, it's pretty obvious that this is the 3rd wave because of the gapping in the middle. The gap would be in the 3rd of the 3rd, and you can go into the 3rd there as well. So it really identifies it as the 3rd wave. So we've got 3, 4, 5, the 3rd, 4th here. Just a little bit small, this structure here. And I feel like this is 1 and 2 and 3 here, and we still need 4, 5. So there could, like I mentioned before, this wave 3 could be over here for that as well. But I can squash the 5 waves into that point there, but I just don't like doing that, and this wave 4 is probably a bit more relative to this one, but at least this wave 4 here, I suppose, is bigger than the previous wave 4, so that's one thing. So really we've got to put the NASDAQ into the same sort of boat here as well, in terms of counting that. So yeah, I can count it much the same actually down here. So I think it's above at 61.8% here, so it's going to be going higher. It's going to be looking at the 13,000 at that point. Will it get there? The first things that we can do here really is look at copying this here as 1 here and 2. I feel like it might be a little bit advanced for the stock market, in a sense, because this can move up today, but that means the stocks are going to have to gap up, That will be 1, 2, 3, 4, 5 up here for the 3rd wave, the 4th wave, and the 5th wave. I'm just feeling it's a little bit small, this leg here, compared to these other legs. But anyway, I would expect this is going to go to the 13,000, and it could go above. So it's going to be quite good because, this 13,000 is going to be the line in the sand. It's going to be the front line. It's going to be the battlefield. So if you just give it enough time here, we'll be able to understand at what point it becomes the retested resistance, and then we can move in. And then we've got group 2 here as well. So when group 2 here becomes the resistance, then you can add to that, and the same under the 50 here as well. It's just better to do it that way because you can manage your exposure better. Much tighter. You don't have to wait for the 65. You could do it at the 72 if that became the retested resistance, or split the bet up and put 1 under each, but make sure it's tested. It's easier said than done, but you can see that you know, at the 65 here. You can see how important that 65 is. It came here, smashed it here. It's been trying to get up through there, hasn't it? You know, it's come back and tested it again and sat there. You know, then you can start to see the 72 here also being important as well. Wild swings at the beginning, less swings here and less swings here. And that's kind of good to note too, because this is what you could do on the short side. So in a way, it's all been sort of, you know, it's all been sort of coming into that number in a way. Do you know what I mean? So then you come into here and you see, okay, well, it could go high on that high. Then you get this here, and then you can go for, I mean, it's easy in hindsight, do you know what I mean? But you kind of notice it coming into this number. It's all about that number right there, you know, the 72. So hopefully we could use that because it had, because it carried a lot of weight over this side. It's going to carry a lot of weight over this side when it comes down, right? And it could be just, it can mirror it here and do wild swings here, and eventually settle down into something. It probably won't do this, but it's generally the idea, you know. So looking at it like that, and then looking for this to be retested here, you know. So anyway, just waffling on, but it's all in the detail. I haven't checked that if that's the 50-60% retracement level either, so better to double check that. And the Russell, so this is the ETF here. So once again, here we've got 1 and 2 and 3, 4 and 5. Doesn't count very nicely here for that, actually. I mean, I can fit it in, but anyway, the third wave here is pretty obvious here. So that's all good. 1 and 2, nice strong gap in the third of the third, the fourth, the fifth, the third here. Yeah, it looks like it sort of wants to push up here further. How far it'll go, I don't know. I think that is the 61.8, so 193 for the ETF. And then we can drag the futures contract into here as well and go to 1930. Obviously the 19 is going to play out here as well in this space, but you know, the third wave here is quite long, so we should get something like the wave 1 coming into play here, so up into group 1 here. And having the 19 is good here because, you know, that's going to struggle up here through 10, 20 and 30, and then it's going to come back down. So normally I say if it trades above the 30 up here, say if it makes its way up here and it goes to 33 or 34 or something like that, then it comes back and it finds the number 2 here in group 1, so this is subgroup 1. If the 2 becomes the resistance, that's where your first trade can go into, and then the next one lock in under the 10, and then under the 19 here. And once that's done at the 19, then you can use group 2 here and lock in, and then under the 50 here. Because yeah, I mean, you could just dump it all in here, you could say, but the trick is managing that risk. It's all about the trick is, you know, they say the trend, you know, will take care of itself in that regard. It's the risk that you need to manage. So it's your exposure is a nice word to, you know, how exposed are you in all of that there. So steady as she goes is always a good way. So that's the Russell, and the DJ is much the same. I won't go into too much detail, but the A wave here, the A, the B, 1 and 2, and the wave 4 is a little bit small. That's my only complaint today with the markets, and we should be pushing up further here. So we could be going up for another 2 days, maybe another 2 sessions, you know. So I think Wednesday and Thursday are the swing days, so they will be the ones that will see all the profit taking and the changing of the guard, so to speak. So we'll look for those days to try to find our way in. Alrighty, thanks for tuning in. Cheers.